On my recent video I released regarding the market as a whole and my thoughts on the upcoming earnings season and a possible drop again in the market, I saw a ton of comments that concerned me. Comments like, I lost all my gains. Comments like, I am scared. Comments like, why is the market crashing? The Fed is supposed to be helping here. Honestly guys, I didn't plan to make this video, but after seeing those comments, I just had to, because it concerns me that so many of you guys have a ton of fear when the market drops a couple of percent, not even, we'll talk about that in a second. But if you feel that this was you felt fear, you felt panic, you felt uncertainty on Monday when the stock market saw a little bit of a dip, then you need to stick around for this video. You need to watch this whole video through because it's going to help you a ton with your mindset, with your portfolio, with your management of your portfolio, and you're going to come out a better investor from these next 10-12 minutes or so. But anyways guys, smash that like button down below to show your support for the channel. Don't forget to subscribe if you're brand new here. And I wanted to thank all of you that recently hit that join button here on YouTube. It helps the channel out a ton and I really truly appreciate that. So thank you for your support. So guys, this is what the Dow looked like after the market closed on Monday. And this is when I actually filmed the video. You can actually see that it closed slightly green on the day, so make note of that. Next is the S&P 500, again as of Monday's market close. And this time it was red, but it was pretty much flat on the day here. So why were there so many comments on the last video saying, you know, I lost all of my gains, the market crashed, all this kind of stuff? Well, if we look at the NASDAQ, we can see this index took a hit, down over 2% on the day. And this is where a lot of pain was felt for investors. So although the broader market remained fairly flat, the tech-heavy NASDAQ did see a pullback. And this leads me to the conclusion that many of those commenting on the video about panic and fear and uncertainty with their investments are heavily invested in tech stocks. Now, if you're not familiar with the holdings in the NASDAQ, here's a sneak peek of the top holdings. And we can see across the board, we see some pretty big sell-offs here with big tech, with companies like Microsoft, Amazon, and Facebook losing 2% of their value. Then you see Tesla losing nearly 3% after it was up something like 5 or 10% on the day, I believe. And then you have some high growth names like Nvidia down 3.5%, Adobe down 4.76%, PayPal down 3.76%. And remember, these are the largest holdings of the index, so they have a big weight on the index's movement. The Dow, for example, as a contrast, is a much more diversified index away from tech. And you can see the second heaviest weighted stock in the Dow, United Health, was up over 3% on the day. So while they did have some names down here in the Dow, there was a lot of green across the Dow, which helped eke out a small gain on the day. So why does all of this concern me and how does all of this affect you? What these comments tell me is that one, investors are buying stocks very recently, most likely on the recent run-up that we've seen on these stocks like Tesla. And number two, investors have way too much exposure to tech stocks and specifically high growth tech stocks. There has been a flood of new investors that have entered the market in the last couple of months. People that have never considered the stock market before, people that have had no interest in the stock market before, have decided to enter the market now because they hear from friends, from family, from Uber drivers, from whoever, that it's very easy to make money in the stock market. And as a result, you know, these people have seen others around them make money and they decided to enter as well. And there's a few common trends that I see as well with these new investors. The first is that the ones that have come in recently have focused on companies like airlines, for example. I know in Canada, a lot of people are focused on Air Canada, and in the States, American Airlines seems to be getting a lot of attention. And the logic I hear is, you know, people gotta fly, so these airlines aren't going anywhere. And while that's true, airlines are gonna be around and people are gonna start flying once again, it does not mean that the businesses will still be around, and does not mean that the businesses will still be around in their current form. There's been plenty of times that airlines have gone bankrupt in the past, wiped out shareholders, and the company starts afresh again with new shares and new shareholders. So anyone holding the stock prior lost their entire investment. The other trend that I see is people focused on high flyer stocks like Tesla. But Tesla's not the only one. There's a lot of other high growth names that have been picked up recently by investors and have been getting a ton of attention. Shopify is a big one, so let's start off with this. It's one of the most popular growth stocks in the market, and it was down around 6% on Monday, wiping out billions of dollars in their market cap. Then we have another one that we covered on the channel recently, Fastly, who has been on fire until the last few days and dropped over 12% on Monday. So there's quite a bit of volatility seen in that stock. Peloton, another fan favorite, especially for newer investors. High growth company, high growth stock, down 10% in just one day. NEO, you guys love NEO. I made a few videos on NEO recently, down over 7.5% in one day. And then we have Square, another hugely popular growth stock in recent weeks, down over 7% in one day. And guys, the list goes on and on and on. Pretty much any high growth name you can think of was down a few percent, at least 5%, some 10%, some a bit more than that. And as a result, investors lost their minds. But guys, stop for a second and just try to look at this from a kind of broader view, get some perspective on what just happened, right? A stock, for example, Fastly dropped 10%, but the stock is back at prices it was at just a few trading days ago. Yes, it was a big drop, but the stock also had a big run up. Stocks don't just go up in a straight line. They go up, they pull back, they go up, they pull back, they go up, so on and so forth, right? So you can't really expect things to move just one direction and everything is just moving that direction forever. There are going to be pullbacks whether we like it or not. Unfortunately though, a lot of investors have been buying stocks on the way up here, and that has resulted in them gaining a few percent profit, and then when they see a big down day, it may bring them back to neutral or slightly negative. And then guess what? They think the stock market is rigged. It's really dangerous to get used to stocks moving in just one direction because, like I said, it's a reality that stocks move both up and down, and the quicker you get used to that, the quicker you're able to control your emotions and the quicker you're able to capitalize on deals when they're out there in the market. And when there's deals, guys, it doesn't mean the stock is moving higher every single day. It typically means there's a lot of negative sentiment around it, a lot of fear around it, and the stock prices are just plummeting. And that's when you want to buy. So if you are someone that felt like the world was ending on Monday when the Nasdaq dropped by 2%, that should tell you that you are overexposed to technology and you're not able to handle the volatility that these stocks go through. Now I'll say this, there's nothing wrong with being tech heavy, there's nothing wrong with owning only tech in your portfolio in my opinion, especially if you understand those businesses. But with these high growth companies comes high volatility and you have to be ready for that. But unfortunately, most investors are not, and days like Monday truly do expose those investors. So if you can't handle days like Monday and you feel like those wild swings that you saw on Monday were just too much for you, you don't want to deal with that, then you need to reduce that exposure in tech. You need to add other stocks to the portfolio to well diversify yourself so that, when some companies go up, others go down, and it just all balances out. We saw the list from the Dow, right? There were some great businesses in there that had a green day despite some of these high growth stocks having a negative 10% day. And if you have a well-balanced portfolio, those things kind of balance out over time. Volatility isn't as drastic in your overall portfolio, and newer investors are able to sleep better at night. Now guys, FinWiz here does a really good job of mapping out the different sectors and companies. We can see visually here that healthcare and industrials did extremely well on Monday, and even financials like the banks and insurance companies did well as well. Now, if you had a balanced portfolio, these companies would help reduce the volatility in your overall portfolio and also help reduce those paper losses that you may have seen on Monday. I think this is a big lesson for investors and should not be taken lightly. And this was kind of like a mini warning by the market, and it lets you know how exposed you are to certain sectors. And like I said, nothing wrong with being exposed to tech only, but personally, I like to diversify my holdings across different sectors, different industries, especially for days like this, to keep my portfolio more balanced. Sure, you can go all in on high growth stocks, high risk stocks, and when things are going well, you feel like a genius, but when days like Monday hit, you start questioning your investments, you start questioning your decisions, you start questioning the stocks you hold, and that is the complete opposite mindset you want to have as a long-term investor. Now guys, if you are interested in in my personal portfolio, the different types of stocks that I hold, and how those stocks are performing for me, check out my VIP group. Link is in the description down below. We have quite a few members in there right now. We have a Discord chat where you can discuss, ask me questions, ask other members questions. So if that sounds interesting to you, check it out. Link description down below. But either way, guys, what I do want to say here is that I have noticed that retail investors are now treating the stock market like a casino. They're just throwing money in there and they're hoping that they can double or triple their money in a few days. And a lot of times that is happening because of the volatility we're seeing. But just remember, that is not normal market conditions. And maybe this goes on for a little bit longer, but eventually things will come crashing down. The stock market can be ruthless when it wants to and really give you a false perception of hope. And trust me, guys, every investor has been through that before, and no matter how experienced you are. And the only way to really learn from this is going through it, unfortunately. But I hope by creating videos like this, it helps you get a head start on learning. It helps you prepare better, because if another stock market crash does hit, I would hate to see you guys lose money. All I'll say is this: just be patient, pick good businesses, hold them over the long term, and the odds are definitely then in your favor for coming out as a much more wealthier person than you are today. Anyways, guys, whether you agree or disagree with me, remember to smash that like button down below. Let me know your thoughts on the current market condition as well in the comments section down below. And I want to thank each and every one of you for sticking around to the end of the video, guys. Thank you for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.